what always goes up must come down. But what about the service sector records? What about the unemployment rate? Are those things that can sustain themselves throughout the Trump administration?
Well, they're going to sustain themselves is what they are, but you really have to look at the numbers deeply. And when you look at where most of the growth came, and again, the new employment numbers were way off what they had expected by 100,000 or so. It's mostly in the...
and was that because of the hurricane, Gerald?
No, this is after the hurricane. They expected a big boost this time, and it didn't show up. And when you're seeing the jobs, I love the words that they use, leisure and hospitality. I mean, your bartender or waitress, I mean, not demeaning it. I mean, they don't pay a lot of dough. And so that's where we're seeing most of the growth.
Service sector.
Yes. And again, but leisure and hospitality particularly in that. So we're not seeing, you're seeing a decline in the retail sector, and that's significant as well. Some growth in manufacturing and construction. But overall, Owen, the job numbers have been lousy for years. When you look at the unemployment rate in one sense, and that is the labor force participation rate. We're at 1960s, late 1970s levels. So once people in the USSA are no longer collecting benefits, they're no longer counted as unemployed. So you got a lot of people out there that they're not counting. So overall, as we see it, the economy is doing better than it has been. There's no question. And we did a 180 on when Trump got elected on the stock market. Within a week, we said this rally is real. And now by next Wednesday, it's going to be 1 year old. I mean, that's a long time to have a sustained rally. And now the NASDAQ, the Dow, they're at new highs, keep hitting new highs. Yes, there will be a correction, but we don't see a crash. But again, when you look at the numbers also, it's very important to see, the wage growth is very minimal. Matter of fact, it was flat again. So you look at the data. Again, that's all we're looking at. You have, 78% of the people say they're living paycheck to paycheck. And Obama used to brag about all the jobs that he created. Folks, we got folk, all right. 94% of the jobs that were created under Obama, according to the Harvard-Princeton study, are temporary jobs.
Wait. Are you telling me that Obama folked our economy?
We folked all of us because the guy lied his way into office. The Nobel Peace of Crap Prize winner who automatically sends a troop surge into Afghanistan, destroys Libya. This is the richest country in the region. They didn't do anything to us. We got to get rid of Gaddafi. Gaddafi has to go. I wonder how you got those. Why you have all this disruption down there, down in Mali and Niger and all that area? Oh, it couldn't be because of the people that Obama brought in to overthrow Gaddafi, those, quote, radical Islamists that are now all over the place because of that. Again, he lied about everything he was going to do. He lied about, folks, we're going to go revisit NAFTA, he says, to win the votes over there in the Rust Belt state. And then as soon as he gets in, what does he do? He said, well, we are going to revisit that again. As a matter of fact, the most transparent president in the United States, a cat you could see right through, man. He was the guy that gave us the Trans-Pacific Partnership that was so transparent that we, the little people, were never allowed to look at it.
Yeah. Well, folks, you heard it here first. Obama folked the United States. Obama really folked us good. And it is amazing, though, he tried to make fun of President Trump saying, oh, he's going to wave a magic wand, folks. But then it's not really waving a magic wand. It's actually trying to do something to get these businesses back, get manufacturing back. In the break, Gerald Celente is going to be banging on the drums during the break. He's got to get rid of some of his folking anger here. But on the other side, I want to get his take on what we continue to see with the stock market record highs. I'm not someone invested in the stock market, but I feel like what goes up must come down. So I want to hear what he thinks about that on the other side. Gerald Celente is our guest from trendsresearch.com. The economy is definitely back. Jobs are back. Trump is trying to put America first. And that alone is such a distinct difference than Obama that you're actually seeing the results. We'll be right back. Welcome back to the War Room here. Another segment with Gerald Celente. I want to get right back into the stock market. You're seeing record highs reported every week. Gerald, I was looking back on a little bit of this, and just about 10 years ago, the Dow, I believe it is, was hovering just over 2,000, usually around 2,400. Now it goes up over 3,000. What does that mean? What does that mean to the average person in the stock market? How does it jump to 3,000 and then just stay there? Is this good for the economy, bad for the economy? What do all these record highs really indicate that we keep seeing?
It really is not about the economy. It's about who's really playing the markets. And 10% of the U.S. population is really the ones that are in the markets. In that 10%, their average holding is around $350,000. The rest of the people, the 52% of the middle class that are in the market because of pension, retirement funds, et cetera, they're only holding about $15,500. So the reason this really happened, Owen, it's plain and simple. Two reasons. Two things they never taught you in economics 101. Quantitative easing and zero and negative interest rate policy. They're just dumping cheap money into the system, and that's what's really keeping it going. Beginning and the end of the story. We got it wrong. We thought the markets would crash in 2012 again. But again, we had no idea that they would continue this scam. And it's not only the United States. You know, you're a nice guy, Owen. I got a 10-year bond for you that I'm going to sell you. We're over in Japan. And because you're such a nice guy, in 10 years when you buy it back, I'm going to give you less money than you loaned me. This is actually going on. You have negative interest rates in Europe. They're feeding the equity markets. That's all this is. The markets will retreat when interest rates go up, and they're barely going up. I just mentioned the ECB, Europe. They had a meeting last week, and what did they do? Well, we're going to cut back on our quantitative easing. Quantitative easing, what is that? Oh, we're going to buy corporate bonds from the biggest companies out there, and we're going to let them borrow money for basically nothing.
Well, now it's QE unlimited, right?
You got it. And that's what is going on around the world. China, same trip, man. You look at China's debt level. Go back 20 years ago, China's total debt level was about $500 billion. Today, it's approaching $40 trillion. It's one big Ponzi scheme. Again, when I talk about Japan, they're the ones that are buying up the bonds, and they're buying stocks. And then you look every day, virtually, the merger and acquisition activity. And the bigs keep getting bigger and bigger because they're borrowing dough for free. And now you look at the new guy Trump is putting in. He's dovish on interest rate rises as well.
You're talking about Powell?
Yes.
Okay.
So as long as interest rates stay low, the market keeps going up. We believe the market is near its top. We don't think it's going to grow as fast as it was, and we're also going to have a correction. We don't see a crash at this point, just a correction. And it's very important to look at it again at the very different levels. I mentioned it's only at the top where most of the dough is. So now as we look at it, we're finding that homes that are selling for 1.3, 1.5 million bucks, they're not selling anymore. The high-end condominiums, the luxury condos, they're not selling anymore. Rental space in high rental areas, a lot more on the market. So there's a slowdown at the top. It's not going to hurt the everyday person because we're not in the market. Psychologically, it will have an effect, but overall, it doesn't have one. It's only hurting the top of the market.
So what do you think? Because I'm seeing stories now it was about 2008 when home ownership started taking a really sharp dip. It kept dipping every year since then, not as drastically. But now I'm actually seeing the graphs go back up, home ownership on the rise. Are you saying that trend is not going to continue, or what do you think?
Well, if Trump goes through with his tax plan, it's going to hurt home ownership because people won't be able to deduct their mortgages and other taxes. So that's really put a damper on it. And you look what happened to the markets in areas of that sector when this was announced yesterday in the home builders. So that won't be positive for it either. But again, where is the growth coming? And you're still looking at home ownership rates that are basically at 50-year lows. They're increased, but they're still low. The millennials aren't buying homes.
So that's more of a something that's tougher to fix than just one administration per se. Am I hearing you right?
It's the whole economy. And by the way, going back to the positives, what Trump is doing with NAFTA and the other trade agreements is what the country needs to grow that class of people. Here's something, Owen, that I find totally offensive. It's not capitalism when you give the richest guy in the world a $7 billion tax break, Bezos in Amazon, so he could open up a plant that pays people on average $28,000 a year. Those are the kind of jobs that are being created. You can't make it on that and buy a home. You're still living with mommy and daddy at that kind of dough.
So it sounds to me, Gerald, like you're not necessarily, I want to get your words on this because my next question was going to be, do you think the market has seen any effects as far as the return of manufacturing to this country? But based on your last statement, you're thinking that the effects of returning manufacturing might not even be that great.
No, that's what we need. That's what I'm saying.
Okay.
That's what has to happen to really boost the living standard in the country. You're not going to get, what are you going to go to college, you get out with $40,000 in debt, and you got a degree in packaging, shipping, and handling, and you're going to make $13.50 at Amazon? So you're not going to make any money with that. We need to bring manufacturing back. That's Trump's strongest trump card at this point in order to really grow the economy with jobs that are going to pay living wages.
Gerald, Trump is on his Asia flight, his trip to Asia right now, and of course he'll be visiting Japan, South Korea, but I think most importantly, at least as far as the economics side is concerned, China. What type of conversations do you expect Trump to be having with China, and do you think the markets will reflect this at all?
The kind of conversations you're going to have, for example, it's a one-way deal in China. If you want to export cars into China, what is it, a 25% tax they put in? But I'll tell you what we'll do. You could open up a plant over there, and you could become a partner with one of our government fronts, we'll call it a private company, and give us all your technology. And that's what they've done in aerospace and everything else. So what Trump is going to do, he's going to say, no more of this. Because then again, people complain about NAFTA, oh, they want to do away with NAFTA. That's what they used to have. It was called the chicken tax, by the way. It began under Johnson. What happened was when we were exporting a lot of chickens back in the late 60s, Germany put a chicken tax on it. So Trump, what LBJ did was say, okay, we're going to put a tax on all those VW buses you got coming in here that the baby boomers love so much. So it was the same thing they're doing now in China. That didn't end until Slick Willie Clinton took that off. So what Trump is going to do is saying what's good for you is good for us. We have to equalize this. So when you look at the trade deficit with China, it's unsustainable in this nation. So China, they're going to do business. They're not going to stay, oh, no, we're not going to do this. It's a business deal, that's all. And no business has been done. The strongest suit that Trump could really build his reputation and his not only his reputation, but his real help to the nation is through trade deals. The trade deals that Clinton and Bush and Obama have put in place have destroyed the nation. The numbers are there for anyone that could add up to 5, because it's tens of millions of jobs that have been lost. You don't have to have a great degree in economics to figure this out.